I'm Frank. It's time for the Frank Road Show. Welcome back. By the way, we had a winner from our contest last week, the Jimmy John's LBI contest. Steve out of Pinehurst, North Carolina, was our winner. The first to let us know that LBI at Jimmy John's sub shop means leave the bread in. What they'll do at Jimmy John's is they'll pull out the bread from the top half of the bun in order to fit more ingredients in, right? Less bread, maybe a little more healthy, but the bread is so good at Jimmy John's. Leave that bread in. Had a bunch of responses, so thanks for that. From as far away as California. Pretty cool. Today or tomorrow, it's time for my favorite pizza joint in the Stamford area, Connecticut. My go-to is Bronx House Pizza on Ryan Street, near Twin Rinks, which is on Hope Street, a little bit north Stamford. Oh, so good. Little tiny small place, really well run, beautiful pizzas. Other good ones in Stamford, if you're looking for, Luigi's on High Ridge, Town Parlor on Bedford, John's Pizza on Elm Street. Again, that's at that 5 Points where the Dunkin' Donuts is, and the Strawberry Hill Avenue and Prospect Street. What's yours in the Stamford area for pizza? Hey, by the way, I'm trying to build up a YouTube channel here, and I'd love to get some subscribers. So tell your friends and family, do me a favor, subscribe to the channel. Let's see if we can't build a little something here, talking about the hot topics of the day. All right, let's check on a few things today. I try to keep these to less than 15 minutes. President Biden didn't waste any time. He won't be denied. After the Supreme Court ruling knocking down his $400 billion student loan forgiveness program, he pulled the trigger on a student loan forgiveness anyway. And not even the SAVE Act, which I talked to you about last week. This now is another gimmick. The president's clearly focused on doing anything to satisfy a horrible campaign promise, went ahead with another executive action and canceled approximately $39 billion in federal student loans that impact about 800,000 individuals. Moral hazard, a giveaway to colleges and universities. This time it was done by a rule change. By the way, rules impact our lives more than legislation. This type of stuff really annoys me. This is the role of the U.S. Congress. But consecutive presidents now for many decades have used their power to change rules to essentially legislate. The change was executed by the Department of Education, led by Secretary Miguel Cardona, who called it an historic step. For far too long, borrowers fell through the cracks of a broken system that failed to keep accurate track of their progress towards forgiveness. I have no idea what that means. That means nothing. Progress towards forgiveness? They took out a loan, voluntarily pay it back. Today, the Biden-Harris administration is taking another historic step to right these wrongs and announcing $39 billion in debt relief for another 804,000 borrowers, says the secretary. He went on to say, by fixing past administrative failures, mind you, for simply requiring people to pay back their loans they voluntarily signed for, we are ensuring everyone gets the forgiveness they deserve. Deserve. Listen to this language. He went on to say this administration will not stop fighting to level the playing field in higher education. Hopefully Congress or some state will do something about this and again, take it to the courts. This time, those who benefit are those who have been paying back their loans for 20 to 25 years. And I mentioned this last week in my commentary about student loans. That's something President Obama had put in place. So couples in their 40s, so no one under 40 will benefit. And a good majority of those benefiting likely don't need to benefit in their prime years. If you've been paying back your loans for 20 years, you're in your 40s. You're likely married. You might have dual income. You're in the prime earning years of your life. These are people that likely do not require student loan forgiveness. The legal authority by President Biden was the Higher Education Act of 1965. Holy cow. Again, not good, bad public policy. Again, just chasing after votes, trying to fulfill a horrible campaign promise. Very unfair. Seems almost helpless. Where is Congress? Anybody? Somebody? States? The other thing that caught my attention over the weekend was a series of bad quotes by some prominent public officials since Friday. We'll start off with Democrat presidential candidate Robert Kennedy, who was recorded at a fundraiser saying this: COVID-19 is targeted to attack Caucasians and Black people. The people who are most immune are Ashkenazi Jews and the Chinese. I don't know where we got this information. I raised lots of eyebrows when that one came out. No, never seen any details on whether or not it was ethnically targeted, and I have no data on how the Chinese survived or the Ashkenazi Jews survived compared to other people. Haven't seen data on that. Doesn't seem to be a very good comment. Doesn't seem to be based on anything real. Seems to be speculation. So China locked down the most aggressively in the world. Haven't seen their data on how many people were killed. It's unclear exactly what went on in China with COVID, but he really got a lot of attention with that one and a lot of pushback from Jewish communities around the country. He's going to have to recover from that somehow. Next, we have GOP presidential candidate Mike Pence, who was at the Family Leadership Summit in Des Moines, Iowa on Friday. Tucker Carlson was the main guy there at the conference. He interviewed pretty much every presidential candidate that attended the conference, and he didn't give them an easy time. He grilled them. And so in his conversation with Mike Pence, he went on to say, and this is Carlson, "You are distressed that the Ukrainians don't have enough American tanks. Every city in the United States has become much worse over the past 2 years. Drive around. There's not one city that's gotten better than the United States, and it's visible. Our economy has degraded. The suicide rate has jumped. Public filth and disorder and crime have exponentially increased, and yet your concern is that the Ukrainians, a country most people can't find out on a map, who have received tens of billions of U.S. tax dollars, don't have enough tanks." I think it's a fair question to ask. Like, where's the concern for the United States in that? So this was Carlson's question to Mike Pence. Mike Pence responds with, "It's not my concern, Tucker. I've heard that routine from you before, but that's not my concern." Seemingly saying that the quality of life in U.S. cities, the economic challenges confronting Americans, crime, tough economic situations, that's the, our urban center is being set back. That's not Mike Pence's concern. That seemed to be what he said. Now, Mike Pence says that's fake news. We're going to have to wait to get a clarification on that as well. But that did not come out well. And he did not make any effort in real time to correct what he said, but he repeated it twice, seemingly suggesting that the quality of life in American cities is not his concern as a GOP presidential candidate. Not good, Mike. Not good. He's challenged anyway in terms of possibility of winning the nomination, and this probably just set him back a long way. I can only say, ouch. And then lastly, we had Secretary Janet Yellen over the weekend. She was at the G20 finance ministers meeting in India, and she was pushing back on criticism that there was a trade-off between aid to Ukraine and aid to developing nations, forgetting about helping Americans with this money that was sent to Ukraine. She went on to say, ending this war is first and foremost a moral imperative, but it's also the single best thing we can do for the global economy. So 2 points there. First, U.S. Treasury Secretary Janet Yellen, U.S. Secretary of the Treasury Janet Yellen, is not responsible for the global economy. She is responsible for the U.S. economy and doing what's right by American citizens and doing all she can in her role as Treasury Secretary to make life better from a financial perspective for everyone that lives here. Her job is not the global economy. Now, of course, that's been something that the U.S. has been doing for a long time, focus on the global economy rather than the domestic economy when it comes to public policy. But she needs to recognize that that's not her imperative. Now, that's globalization. That mindset is globalization. And then the other part, of course, is it came across like she was suggesting war is good for economics, for us, for businesses. And there's some reality to that, certainly on the weapons manufacturing side, ammunition, et cetera, support needed for troops. But of course, let's not forget the devastation that's being wreaked upon, excuse me, the human population, the infrastructure of Ukraine, the degradation of the environment. So she stepped in a little bit there. She's going to have to clarify that in the next couple of days. So some interesting comments and quotes from some leading prominent officials are going to have to be cleared up here today or tomorrow. All right, let's check it real quickly. The week ahead, economy and markets. Data for Monday. We have the July New York Empire State Manufacturing Index expecting down 4.3. Manufacturing in the Northeast region has been sick for a while. This is more indications of recessionary pressures. Tuesday, we have June retail sales expecting up 0.5. Ex-auto and gas expecting flat. Year over year, we're looking for 1.6% increase in retail sales. Not great, not bad. Again, a little slowing down the economy. We also get on Tuesday, June capacity utilization 79.5 and industrial production 0.0. Wednesday, we have MBA mortgage applications for the week ending July 14th, and we have June housing starts. 1.48 million units is what we're looking for. Thursday, initial unemployment claims for the week ending July 15th, the Philly Fed Business Condition Index, and June existing home sales. Nothing on Friday. Fed officials are quiet this week. They're in a quiet period as we approach next week's FOMC meeting, the Federal Open Market Committee, expecting the Federal Reserve to raise interest rates another 25 basis points, and that's the federal funds rate. And let's just take a quick look at interest rates around the world, how the Fed compares. Right now, the federal funds rate for the U.S. is 5.25%. The only nations with higher rates right now are the Reserve Bank of New Zealand at 5.5, the Central Bank of Russia at 7.5, the Reserve Bank of India at 6.5, and the Central Bank of Brazil at 13.75%. Fed will take rates up to 5.5, and again, give the interest rate advantage to the U.S. and should spark a little dollar strength on a long period after dollar sell-off here as interest rates have been rising around the world. A little snapshot in the markets. S&P 500, 4,505, another yearly high set on Friday. Watch 4620 above and 4349 below. US 10-year, 3.779%. Watch 3.94 above and 3.71 below. We got to get back above 4% for normalization of interest rates. NYMEX West Texas Intermediate crude oil, $74.24, approaching yearly lows. Watch 80.86 above and 70.64 below. Weak oil prices on the back of weak demand, slowing economy. Gold, 1,962.90, range bound. Watch 1,997 above and 1,915 below. And the U.S. dollar index, 99.84, lows last seen in May of 2020. Watch 101.58 above and 99.11 below. And again, you can, as I just mentioned, on interest rate changes there, it's largely related to interest rates and some other economic issues. The economy is moving towards recession. Interest rate differentials are narrowing. Dollars take a little bit of a hit, but still relatively strong. Have to rely on a little bit more technical analysis this week. Not a whole lot of data. Watch for headlines from any Fed officials, of course, but the main news is for next week at the FOMC meeting. All right, couple last hot topics. Interest on the national debt, now our third largest budget outlay at the federal level. Oh no, Houston, we have a problem. Why? Well, massive deficit spending by Democrats and Republicans, though led by Democrats for the past 2 years, and rising interest rates by the Fed to stave off 40-year high inflation rates. Again, those inflation rates are driven by massive government spending and, of course, the horrible monetary policy from 2008 of quantitative easing and zero interest rate policy. Not good. Notice the Fed balance sheet, the chart. Talk about monetizing the federal debt. This is not how to run the world's largest economy. Look at the inflection points on that chart. Then lastly, check in on crypto real quick. Larry Fink, head of Blackrock, the largest asset manager in the world to the tune of $8.5 trillion, has changed his tune on crypto. Last November, in an interview with Reuters, Fink described Bitcoin specifically as a speculative investment that thrives because of the cryptocurrency's anonymity. Don't know what that means. Crypto is an international asset and will transcend any one currency valuation, says Fink. So a real 180 here for him. If you look at the value of our dollar, how it depreciated in the last 2 months and how much it appreciated over the last 5 years, an international crypto product can really transcend that. Well, then he hasn't been paying attention to markets. If he's suggesting cryptocurrencies are less volatile than the US dollar, he's lost his mind. He went on to say, that's why we believe there's a great opportunities, and that's why we're seeing more and more interest. And the interest is broad-based and worldwide. Yeah, speculation. Let's make some money. What a load of crap. He went on to say, we believe we have a responsibility to democratize investing. We've done a great job, and the role of ETFs in the world is transforming investing. We're only at the beginning of that. Interesting, he's changed his tune on crypto just as BlackRock has introduced an ETF, a crypto ETF, exchange traded fund. Cryptocurrencies are a Ponzi scheme. The only value they have is someone else might be willing to pay more for them than you did. They produce nothing. They only get value from deliberate, constrained supply. Not a fan. Complete speculative asset. And that's all it's about. Will you pay more for it than I did? Great, then I can make money. At some point, someone's not going to want to pay more for it than you did. All right, that's a quick run on the hot topics today. I'm Frank. Always try to buy American.